Hey everyone, quick question. What if your employer had a secret weapon to turbocharge your retirement savings, but most of you didn't even know it existed? Well, that's exactly what's happening with corporate NPS, and honestly, I think this might be one of the most underrated financial tools out there right now. Let me break down why I'm obsessed with this topic and why you should care. Okay, so first, what even is corporate NPS? Imagine if your company helped you build a retirement safety net, but unlike your standard provident fund, this one's completely optional for employers. That flexibility? Personally, I think it's genius. It gives companies a chance to flex their benefits package without government mandates breathing down their necks. But here's the kicker, the portability. Your NPS account sticks with you, not your job. If that doesn't scream employee empowerment, I don't know what does. Now let's talk money. Employers aren't forced to contribute, and honestly, that's where things get spicy. Some companies might throw in 14% of your salary just for tax perks, while others might leave it entirely up to you. What many people don't realize is that this creates a total mind game during salary negotiations. Is that generous employer contribution really just a rebrand of your basic pay? I've seen so many employees get dazzled by percentage numbers without checking if it's coming out of their own pocket indirectly. Tax benefits are where corporate NPS shines, but also gets complicated. Section 80 CCD 2 lets you deduct employer contributions up to 14% of salary? That's huge. But here's the catch, your company's tax regime choice changes everything. If they're in the new tax system, suddenly those deductions matter way more. A detail I find fascinating is how this quietly pushes employees toward financial literacy. You have to understand tax slabs and investment vehicles here, no more setting and forgetting like with EPF. Let's address the elephant in the room, market-linked returns. This isn't some guaranteed FD payout, we're talking stocks, bonds, and all the roller coaster emotions that come with them. What this really suggests is a fundamental shift in retirement planning philosophy. Employers aren't handing you a fixed sum, they're giving you access to wealth-building tools. But does the average employee truly grasp market volatility? If my cousin's WhatsApp forwards about safe mutual funds are any indication? Probably not. Education gap alert. Portability is where corporate NPS wins gold medals. Changing jobs used to mean closing old accounts and opening new ones, ugh, paperwork nightmare. Now your retirement fund basically follows you like your Google account. If you take a step back and think about it, this could completely change how we view job mobility in India. No more losing years of contributions when you switch companies. It's like having a financial LinkedIn profile, your career moves actually build your retirement wealth. Withdrawal rules are strict AF though. We're talking 60% lump sum limits and mandatory annuities. Some people hate this, but honestly, I'm here for it. This forces discipline in a country where retirement savings often means that one fixed deposit I'll never touch. Though I do wonder, is this paternalistic approach actually helping, or just creating frustration? So why should you care about all this? For employers, it's a low-cost way to attract top talent. For employees? It's a golden ticket to diversify beyond PPFs and EPFs. But here's my real takeaway, corporate NPS reflects a bigger trend where individuals are increasingly responsible for their own financial futures. The safety nets are getting smaller, but the tools for success? They've never been better. Now I want to hear from you, does your company offer corporate NPS? Did you even know about it? Drop your experiences below, and let's keep this conversation rolling.